Hey everyone, my name's Andy. I'm from the Finding Value Finance channel. Today is actually one of the commenters that I had come on to the channel to talk about Bitcoin. So Charlie, thanks for coming on. I really appreciate it. And one of the questions, what's your background? How did you get into Bitcoin? And then maybe lead into what Bitcoin is real quick, and some of the questions that we had that we're going back and forth with. So.
Absolutely, Andy. Thanks for having me on. So my background is in electrical construction and design. I've been doing that for a number of years now. And I was first introduced to Bitcoin around, I first heard about it in 2013, but I did not invest till many years later, right? And it was about that time when I really started to dig in and research. That was about 2016, 2017. And to me, the Bitcoin breakthrough represented a major achievement for humanity. So Satoshi Nakamoto solved one of the biggest problems in computer science, which was digital scarcity. Okay. And this was done by creating the Nakamoto consensus mechanism. So basically, in order to participate in the system, one must pay the price with work. And work in this case is a heavy amount of computational energy one must spend to mine Bitcoin. So this is where difficulty comes in. And the difficulty adjustment works to maintain network integrity. And this is what the Nakamoto consensus leverages to solve the previously unsolvable double spend problem. And the difficulty changes every 2016 blocks. So, to me, Bitcoin is arguably the biggest, one of the biggest achievements in technology since the invention of the internet. And the white paper came out in 2008 when we were in the depths of the financial crisis. The world watched as major banks bailed out. And meanwhile, an alternative system was being built. Okay. Fast forward to today, Bitcoin has emerged as a new digital asset class. At its recent highs, the market cap has surpassed $1.25 trillion. And it goes without question that since its inception, it's been one of the best performing assets in history. And although it is volatile, it represents one of the most asymmetric trades ever.
So can I ask some questions as we go through? Yeah, let's go back and forth real quick. So, I'm going to challenge. So get ready for some challenges. It's okay if you don't know the answers or whatever, but I'm going to make some comments just based off of what. So, did we solve a scarcity problem by artificially making algorithms so we're basically solving a problem that doesn't need to be solved? Is that correct in Bitcoin? So we artificially created scarcity by using these algorithms, and we're going to go back and forth. It's okay.
Sure.
So the algorithms may or may not be important, and that energy that it needed to create those Bitcoins. So why would someone want to invest in Bitcoin? Isn't this just all artificially made up by humans anyway?
It's a good question. I think why someone would want to invest in Bitcoin is because it's the first of its kind, right? This has never been done. And, for a lot of years, cryptographers and computer scientists, we're trying to solve this problem of digital scarcity. And they failed quite a few times. And, Bitcoin is really, like I said, it's the first of its kind. So it's been able to survive, and it's never been hacked. So,
it's been hacked though, hasn't it? Through exchanges and stuff like that.
So yeah, that's a good point to bring up, Andy. So exchanges have been hacked, right? So centralized exchanges where they exchange fiat currency for Bitcoin or whatever other currencies, they've been hacked, right? Because essentially in a lot of them, there's a big honeypot where, there's a ton of Bitcoin, and, the famous one is Mt. Gox, and there's been numerous other hacks. So no, Bitcoin has never, ever been hacked or cracked ever. It's run flawlessly for many years now. So, that's a common misconception among people, is like, it's been hacked all these times, but no, it's been running flawlessly. Every 10 minutes, a new block is mined. So it's quite an achievement when you think about it, that, it's stood the test of time. Now, it hasn't stood, it hasn't had as much time as gold, but it's quite an achievement. It's quite an achievement when you think about it.
So I'm gonna throw some difficult questions out.
Absolutely. Please.
So every asset that's gone into the largest bubble ever was the best performing asset. So
Sure.
if every single largest bubble in history before was the best performing asset, what makes you think that Bitcoin is not a bubble? And because you used it as a form of justification, as saying that Bitcoin is one of the best performing assets, but that could also mean that it's just a bubble like all the other bubbles before it. So what makes you think that Bitcoin is not a bubble? And I'm gonna add another question right below it. I'm a regular guy. I work, I make money, I pay for things just like everyone else. And if there's no reason for me to transact, if I can't buy gas, if I can't buy food, if I can't buy a lot of these things with Bitcoin, and gold has this gigantic 5,000 year history tied to it, where we used it as money, we used it in barter, we backed our currencies or have currencies backed by gold. So we got this long established history with gold and silver, and I know that you're a gold and silver bull as well. What makes Bitcoin, like what forces people to use Bitcoin? Yeah. So I've got the bubble aspect, and then why do we have to use it, or why would someone use it?
Sure. Yeah, so first, with the bubble aspect of it, sure, it's been in a huge bubble. I mean, from 0.003 cents to past 60 grand. That's a massive bubble. And then you see where we're at now. I mean, yesterday we breached like 15,500. So I mean, this thing is volatile, right? And sure, I mean, you could classify. I would say the entire market is a bubble, really. I think the entire debt market is a massive bubble too. So, sure, there are many bubbles out there, but, I think what separates Bitcoin and why someone would really want to invest is because, again, it's the first of its kind, and it's solved a major problem, like I mentioned before, and that's digital scarcity, right? We've never been able to, have a scarce digital asset before. It just wasn't possible. People tried, but it ultimately it failed. And that's what's very attractive about Bitcoin. Obviously, you can send billions of dollars, very quickly, over the internet protocol. So that's a major achievement, especially, in the 21st century when, wire transfers cost $35 in 3 days. And
there's frictional costs with Bitcoin as well, right?
There are some frictional costs. You have transaction fees, but there
is it a fixed transaction fee, or is it a percentage of what is being transacted?
It depends. It gets a little technical, but you can boost up the transaction fee if you want to try to get it in the next block a little faster. But it varies depending on the mempool. But typically, if you're trying to send $1 billion over the network, paying a $10 transaction fee isn't too bad, especially compared to a $35 wire fee. So
Yeah, so like I don't really transact too much in terms of sending money over long distances. I'll just be honest, I don't ever give anybody in a different country like 10 grand or 30 grand. I don't normally do that.
Sure.
And if I don't normally do that, and I don't have any, and it can't transact small like items, like for food or for going to eat at a restaurant or something like that, what is going to draw people into this asset outside of its speculative appreciation? Like, why would someone like me, and this is my difficulty with Bitcoin,
Sure,
is I don't want to sign up and put my name and my driver's license and all these things on an unregulated, in this unregulated world, so to speak. I'm literally saying, here's all my data and information. I'm going to throw it out in an exchange where anybody can grab this stuff. And then I also don't see the use case for anyone else using it that's like older, that doesn't know how to sign this up. It seems very complicated to use Bitcoin. It's not very simple. So I think it's very well, understood by younger generation like your generation. But as you get to my generation and older, it looks very complicated and cumbersome. So if we can't buy anything with it, and the only draw to it is the speculative nature of the price going up, which it could be in a bubble, we don't know. And yeah, obviously you said that everything's kind of in a bubble, but what's the draw? Why should I use Bitcoin and put my information on an exchange that's not regulated and stuff, where my information isn't necessarily protected?
Sure. Great question.
And maybe it is regulated. Maybe I just don't know. Maybe Coinbase has high regulation, and we've got the problem with FTX and all these other like Binance. Like, I don't trust them.
And we can dive into that, and some of these exchanges are kind of quasi-regulated, and and there's also ways that you don't have to divulge personal information. Actually, I would advise people not to, because all this KYC, even though you have to enter KYC to even open a brokerage account or a bank account, all this KYC, what it really does is just create a big honeypot for hackers to steal personal information. So it doesn't do any good at all, really. It rarely fights money laundering or any of that. So
what's KYC?
KYC is know your customer, right?
Okay.
When you open a brokerage account, you gotta give your social security number, your name, your birth date. You gotta tell them where you work, all that stuff. So I guess what attracts one to Bitcoin, in other words, would be, first of all, it's a permissionless network. So anyone with an internet connection, a smartphone, a computer, they can join the network, right? And this is profound, right? And it's profound for billions of people that don't have a bank account, right? But the next thing that's extremely valuable is that it's inviolable private property, right? So it's property that you can't steal if you custody it right? So this is a very interesting thing, and compared to gold, right? Gold is physical, and I love gold. I love silver even more. Platinum too, Andy. So gold is physical, though. You can confiscate it. You can steal it. But Bitcoin is digital, and you can custody it in a way where nobody can steal it from you. Now, I'll give you an example. So, you can have Bitcoin on a hardware wallet, right, and a cold storage.
What's cold storage exactly?
Yeah, cold storage is basically a device where the key, the private key to your Bitcoin, right, is stored on a hardware wallet. Okay.
Like physical hardware wallet?
Yeah, physical wallet, right? Now,
and you can't wait, hold on, and you can't steal that?
Let me digress. So there's a new thing that happened, right, in the code where this allowed what's called a multi-signature. So what this means is that you need either 2 out of 3 keys to unlock the Bitcoin, or you need 3 out of 5 keys to unlock the Bitcoin. Now, you don't have to custody your Bitcoin in this way, but I would highly recommend, for the long term and keeping it, very, very safe, right? A multi-signature custody is the best form, right? So what you do is you keep 2 keys geographically dispersed in 2 different areas, and one other key can be held with a third party, a trusted, vetted third party. And there's a number of companies that do this now, but this is a superior way to custody Bitcoin, because if you have the Bitcoin key just on a hardware wallet, right? This is known as the $5 wrench attack. Anybody with a $5 wrench can come into your home, beat you over the head until you give them the keys, right? So that's what's beautiful about Bitcoin. It's inviolable private property, right? It's money that can't be stolen. So that's profound. Now, I'd say another thing that attracts people to Bitcoin is that it's permissionless. You don't have to ask permission. And then very, very similar to gold, you have custody of your money, right? And that's huge, right? You have custody of your money. I mean, how many times do you have to ask permission to take out your money? That's the question. But when you control your keys, right? When you control access to your gold, that's custody of your money. That's huge.
Yeah. So I know Michael Saylor, he has a lot of arguments that this is the one thing when I listen to him, some of the arguments are valid, but the thing that I get stuck on is why would people adopt Bitcoin just in general? Why would they adopt it? So I'll try to give some examples here. All right.
Sure.
Bitcoin's price is only sustained off of greater and greater adoption. Fair statement. Money has to be drawn in for the price to go up.
Yes and no. And also, that means, when people don't sell, when they hold their Bitcoin too, or in a lot of cases, people have lost their Bitcoins, right? And that also drives the price up too.
Well, yeah. So there'd be 2 things. So one, money has to come in for the market cap to get larger because it's priced in dollars. So money has to be flowing in for it to go up in price. Your market cap would go up.
Yeah,
so
and
that's one thing.
Money will be flowing in because, and it has been, right, since its inception, because it's scarce, and people value that, right? But,
well, I mean, I can make arguments about scarcity. There's Hot Wheels collector edition cars that are scarce, but it doesn't mean that people will value them at $1 million a car, which is what what people are advocating for Bitcoin. So if I can't find a use case for it, there's no reason for money to flow into it. And the scarcity, I think, is not a valid argument for value, because you can be scarce and not worth anything. So scarcity doesn't mean that it will be ultra valuable if there's no use for it or no utility for it, correct?
Well, I would disagree on that, because I think Bitcoin is the first of its kind, right? It's an absolute scarcity, right? And for the first time ever, we know it's verifiable, that we know exactly how many coins there are. or will ever be in existence. So that is the first of its kind. It's an absolute, and that's huge. And secondly, it's extremely valuable to the market. Obviously, Bitcoin's trading at about 17,000 or over 17,000 right now. So, money's been flowing in because the market values it, and specifically because it's an open payment network that's self-contained. I mean, it's beautiful, really. I mean, it's an innovation in computer science. So
here's another question too. If you've got multiple keys and the only way to unlock this is with all these different keys, wouldn't eventually Bitcoin go away because it's just going to hit every, if people die off or if something happens and they lose something, wouldn't all Bitcoin eventually just cease to exist because people would have lost it, or it ends up in dead people's accounts?
And that's what happens, and it drives the price up. I'll tell you that. But that's the beautiful thing about multi-signature custody, is that you can have, let's say in the 2 out of 3 scenario, you can have 2 keys geographically dispersed, right? And then you can have the third key with a third party. And this is great for inheritance purposes, or, and just redundancy. But I just want to explain one more technical factor when considering private keys. And that is basically, when you generate a private key, you can either have 12 or 24 character, it's called a seed phrase, right? And this is basically a backup of your private key in case you lose it. So this would be stored in a very safe place that only you know about, or someone you just trust with your whole life. And usually this can be etched on a metal brick or something. And this is beautiful because it's basically like having a Swiss bank account in your pocket, in your head, right? And with 12 or 24 words, you can unlock the private key. So that's another aspect of the custody, right? So you got your private keys, but you also have what's called the seed phrase backup.
Okay.
So very cool when you think about it, right? And for example, like, if I'm getting on a plane to, I don't know, internationally to South America, right? And you can't bring 10 grand, right? You can't bring more than 10 grand. You can't bring a bunch of gold, right? But I could bring, I could write down those 12 words or 24 words in a book and bring that, and I could recover my whole Bitcoin stack. So that's huge, right? You could transfer value, over space and time, and that's huge, and
yeah. So I'll lay out kind of what my hesitance are,
sure.
what I'm hesitant. So
Sure.
I don't think Bitcoin has a well-established use case outside of it as people saying that they're assigning it value because of scarcity. But scarcity doesn't necessarily drive value. And what I'll try to say about this is, if I wiped Bitcoin off the face of the earth today, nothing would change. Nothing would change. Now, if I wiped off the face of the earth silver, we couldn't do this conversation. If I wiped oil off the face of this earth, we couldn't drive cars, we couldn't transport our food, we couldn't do all of those different things. We couldn't do the work that we could in terms of manipulating the world the way that we want to with commodities and making them into usable products, et cetera, et cetera. I understand the use case. I understand the value, the utility to society. Gold and silver, I mean, it was created here. It was on Earth. I understand that it was scarce over many, many years. Humans chose this as money. Now, what you're saying is this is new, and that the adoption rate, and because it's digital, the use case is that people will adopt it because it's digital, and it's a new way to transact, quote, value across the world easily.
And people, yeah, that's fair to say. And people
Okay.
are adopting it, right? People will adopt it, and they are adopting it, right? And you can see that in the adoption curve, right? More and more nodes are being brought online every day. And to your point of silver, and I love it. But again, silver is digital. I mean, sorry, silver is physical, right? But Bitcoin is digital. And in today's world, as we speak over Zoom and the internet protocol, more and more things are dematerialized and digitized. So there's extreme value, I would say, to being able to transact over the Bitcoin network. Absolutely. And I think this is a great segue into our next topic, which is on energy, right? I think this is a great segue.
Well, yeah. So speaking of energy, though, and the mining costs of Bitcoin,
sure.
You've got high cost miners, low cost miners, and anywhere in between those two. What happens when you go underneath the low cost producer? And I understand that there's the difficulty adjustment, but that doesn't solve the problem, does it?
So there's two things. The difficulty adjustment is probably one of the biggest achievements that Satoshi did, right? And that's where all the other cryptocurrencies before failed, right? And here's what I'll say is that there's two things, right? So a miner, and these two things happen, right? So a miner can either, if the energy is too expensive, what they'll do is they'll shut down, or they'll just hold on to the Bitcoin.
Yeah. So what's the value of the Bitcoin if the whole mining network shuts down? Because the cost goes below the lowest cost producers.
I would confidently say the whole mining network shutting down is virtually impossible at this point. I mean, there'd be no, I really don't see any way that could ever happen.
Okay, so I'll give an example. If it costs
Sure.
$17,000 to mine a Bitcoin today, and it halves, so the cost goes up to 38,000. Because of that halving. So I should say 35,000, 17 to 35,000 ish, 34,000. Sorry, I did the math wrong. 17 to 34. And we don't have, our lowest cost producer cannot produce that at 34,000 or 17,000, depending on when it is. It's below $17,000. So it costs more than $17 to mine a coin. Why would they mine any more coins? Why would they sustain the network, which is too costly to sustain with no return?
Yeah. So
if they can't mine it and they have to transfer those fees to the transactions, then the transactions become ludicrously expensive, and no one would use it from that perspective either.
Yeah. So it really depends on where the energy is coming from, right? And the price you're paying for the energy, the overhead costs, and there's miners distributed all over the world. I mean, it's insane. So the costs vary. I mean, there's some that are, they're generating electricity with flared natural gas, right? And their energy costs are much lower than others. And there's some that are using geothermal energy that would otherwise just be stranded or wasted, right? And there's many other instances, especially when you look at hydro energy and we'll get into that in a little bit, but so the cost curves, they vary from miner to miner, but that's what's beautiful, is that this is geographically independent, right? You can do it in one area, shut down, and then do it in another.
Yeah, but what happens if the cost goes below all of them? Goes below all of those costs, because there's nothing sustaining Bitcoin's price. There's nothing sustaining. It doesn't. So, like, for instance, if you have a use case for silver, the silver price goes below the mining cost of something, they stop mining, but that also creates scarcity in its thing that it sells. But it has to be used in products. Like, there's a draw that has to continue it. So the price will go back up because there's the inherent demand with a lot of these materials that are used in the world. in Bitcoin, if everyone gets scared all at the same time for a period of time, there's no inherent pull for Bitcoin. I can't pay taxes in Bitcoin. There's no inherent pull from industry. And I don't think that industry will ever have an inherent pull from Bitcoin. And when you say, well, why? Industry will never use Bitcoin because there are trade secrets that they don't want competitors to know. And if you were to transact over Bitcoin, you have a ledger where everyone can see where this company bought this from these suppliers or these people. You're basically putting a ledger and saying, I'm going to disclose all of my trade secrets as a company. So I don't see how companies necessarily could use this from a strategic standpoint and protection of information, privacy standpoint. The ledger is actually bad because and there's other negative things with Bitcoin as well, because if I use it, then you can see how much Bitcoin I own, right?
Well, see, this is a common misconception. Again, so it all depends how you use Bitcoin, right? Now, so how do I explain? So basically, there's a number of ways to obfuscate your identity, right? So when you use Bitcoin properly, you don't divulge your identity, okay? And there's a number of ways, you know, you can protect yourself from divulging any information, right? So there's that, and also, you know, there's a common practice among Bitcoiners, and that's never reusing the same public address too. So there's many ways to combat this, and there's many ways to protect yourself from people finding out, okay, how many Bitcoins you have. Now, if you slip up once, you know, you could divulge, you know, some information, but it really depends on how you use it.
Okay, well, here's another thing that I think about with our current system.
Sure.
Our current system has dollars, and we've got gold and silver that we can use as a secondary form of storing wealth. You say that we can't. Well, a lot of the arguments, not you, but just a lot of the arguments is that you can't transact gold or silver digitally. I would argue that you can, and I'm gonna just give you an argument here, and I'm just making this off the top of my head, guys. It's not predetermined. I didn't even think about this, but if I own a currency, what currencies do is they inflate. We all know that they inflate, and you lose value per currency unit. That is a good thing if you want to buy a house with a loan, because then you can pay it back with currency that is devalued. Now, I can send money across to Canada, and you say, well, you can't send silver. And I argue, yes, I can. I transact my dollars or whatever currency into that person, and he can go to an exchange and exchange that currency for precious metals in his area. So we are already decentralized by nature, because gold and silver is dispersed throughout the entire world by everyone already. And all we can do is we can transact these dollars across borders and buy it in your local currency from a local dealer.
Right, but you're transacting the dollars, you're not transacting the silver, see?
And that's completely fine, though.
Yeah.
The dollar is a currency that nobody wants to hold and is willing to take loans out against. In your scenario of Bitcoin, what Bitcoin has the problem is no one's going to take a loan in it ever. So that will have to be, there's going to be no loans in this system, which could be a good thing.
Well, I'll fight back on that one. Nobody's going to take a loan with Bitcoin.
Yeah. So if Bitcoin is successful and you have a Bitcoin that goes up in price, so you go from 10,000 to 15,000, why would I take a loan out in Bitcoin and pay you back with a more valuable Bitcoin in the future? Why would I take that loan?
You wouldn't. The best time to be collateralizing your Bitcoin would be like, you know, yesterday when the price is real low, and then you're pretty sure it's going to come back higher. So that would be the time when you take out a loan against your Bitcoin. And there's a number of platforms that can do that. Now, I don't recommend any of that because, again, you're giving up custody of your coins, but there's a number of ways to do that. But the best time to do that would be when the price of Bitcoin is much lower and you think it's going to go up much higher.
Why would you take you mean loaning money to buy Bitcoin? I'm talking about the opposite.
Okay, yeah, sorry.
So I took a loan out to buy a house, but I did it because the interest rate was low and the value of the currency is going to depreciate over time. So I want to pay it back with less valuable dollars. It encourages people to take out loans. And that could be good or bad, however you want to argue it. Bitcoin, if it's successful, I'm just going to go with the success, and it goes up in value. Why would someone take a loan? So you basically say there's no loans in the system because you wouldn't want to take a loan against something that you have to pay more back in the future. Does that make sense?
Yeah, and hypothetically speaking, in a Bitcoinized world, when everything runs on a Bitcoin standard, what you would have is essentially price deflation, right? And in that instance, prices are going down. So yeah, I mean, it wouldn't make sense to take a loan on Bitcoin. And even then, a loan on Bitcoin would have a much, much higher interest rate. Similarly to when we were on a true gold standard, even before, 1913, I mean, the interest rate when you wanted to go take out a loan was much higher because it was backed by sound money. Right?
Yeah. So here's another question then. If that is the case, if there would be a lot less loaning in this Bitcoin world and that Bitcoin would be deflationary, that means that all the late adopters of Bitcoin would be transferring their wealth to the early adopters. What makes that ethical in a sense? Why should we give all these people that are sitting in Bitcoin right now all of that wealth that I would arguably say that they don't deserve necessarily? They didn't create any utility to society for it.
That's a good question, and I don't know if you'd be transferring all the wealth right up to the early Bitcoiners, but
okay, so let's just do a hypothetical situation then. So we've got all these whales that own the majority of Bitcoin. All right, they're sitting there and they won't do anything with them. Let's just say they're holding on to them. If everyone decides in the world to adopt Bitcoin and we go into this Bitcoin utopia, that means that all of the wealth of those currencies would get transferred into Bitcoin, correct?
Sure.
So wouldn't all the early adopters be like mega trillionaires? Wouldn't that actually be more? Wouldn't the disparity between the rich and the poor even grow greater under that scenario, not less?
I would argue not. I would argue not, because compared to today's world, right, where we have fiat money standard, right? What we see now is some serious inflation, and you're seeing that exact thing, right? You're seeing value transfer, right, from the very bottom right up to the top, right? And that's what we have today. There's something called the Cantillon effect. I don't know if you've heard of this, but it's basically, those that have access to the freshly printed money, right, they get to use this devalued money first before it reaches everybody else, right?
And it hasn't devalued yet.
Right.
Yeah, so it will devalue everything in the system later. Yep.
Exactly. Thank you.
Yep.
So basically, that's what we have today is rising inequality, very, very serious gaps between the rich and the poor, serious inequality. And that's fundamentally due to central banking, I would say. And, this.
Okay. So let's say that's right then. All right. And then we take Bitcoin. So how many Bitcoins are out there for us to fight over?
Currently, right now?
19 point something million.
Right. That's
with
about
2
right.
million, with 2 million left to go. So how does everyone get one Bitcoin then?
How does everyone get one Bitcoin? Yeah. So everyone in the world, considering the population, wouldn't be able to get one Bitcoin.
Okay,
if you thought about it.
So if everyone couldn't get one Bitcoin and we've got guys hodling like millions of Bitcoins, how is that not a transfer of wealth?
I don't know if anyone owns millions, but thousands.
or hundreds of thousands or tens of thousands or whatever.
Yeah.
Why do they get tens of thousands and we don't get anything?
Well, because they were first to the technology, right? You know, they understood this before, and a lot of these guys, got to remember, were the ones who were mining it in the early days, securing the network. You know, they were the ones providing value to the network, you know, building this thing up in its early days when it was a lot more susceptible to attacks. So that's what I would say.
Yep. So the early adopters, the ones who adopted this technology or whatever, and let's call us late adopters or whatever, why would a late adopter adopt it if all we're going to do is transfer wealth to those people who were the early adopters? Why would I make Michael Saylor rich by putting all my wealth in Bitcoin?
I don't see it like that. And I don't see it like all we're going to do is just transfer value right up to the hodlers of Bitcoin. You know, I think
they're not getting more rich as the price goes up.
No, sure. You know, nominally they're getting wealthier in terms of dollars or whatever, but you know, I think, again, this goes back to, why would somebody want to own some Bitcoin, use Bitcoin, right? And that's the fundamental question here, you know. And I think, to, you know, it's an interesting point to highlight the disparity between, you know, those who have, you know, tens of thousands of Bitcoin and those who have a fraction of a Bitcoin, right? But, you know, again, this goes back to, you know, why would somebody even do that in the first place? And why would somebody, you know, transfer value into Bitcoin in the first place? And that would be, you know, to have a slice of digital scarcity, right? Again, to have immutable, you know, inviolable private property.
But that's assuming that digital coins have value.
Well, digital coins do have value currently, like, and I'm specifically talking about Bitcoin because, you know, all the other 10,000 cryptocurrencies are mostly scams. I mean, maybe there's a few that might make it because of some, you know, technological innovation, which I'm open to, but most all of them are scams. Even Ethereum, I'm highly skeptical of. But, you know, wait. Right now, the value, the market values Bitcoin currently. I mean, that's a fact.
It's so, it's what you just said, though, contradicts the value of Bitcoin, because you said that everything that competes with Bitcoin is a scam, more or less, of what you're saying, and that Bitcoin is valuable, but it all is the same structure. It's all the same thing. I mean, think of what Bitcoin has done. They literally have ripped off the gold. How do we view Bitcoin? When we think of Bitcoin, we see images of the physical gold piece that they put with a little B on. Mm-hmm. Why did they do that?
Sure.
Why did they do that?
Sure. Let me explain. So they did, and I love those coins, actually. So and there's also what's called like a cassatious coin, right? So that's like a physical coin that has the private key on it, right? And even though so Bitcoin is not physical, right? It's digital. But, you know, why would they do that? It's because Bitcoin is kind of a step above, if you will, physical gold. Because, yeah, that's beautiful.
Well, yeah, but why do they represent it as a gold coin? Why do they show all this?
Right. Because, you know, that's the Bitcoin symbol, and it shows the little, you know, the little chip, you know, transistor lines and stuff. So it's basically to represent a physical form of something that's digital.
Okay, right? So if I were to sell something, and the way that I would try to sell something to you that is a scam, I'm just going to give my opinion here. If Bitcoin was not a scam, they wouldn't need to physically represent it by a gold coin. But why do they do that? It just feels like I'm being scammed, because they're trying to portray that the value, which is gold, that Bitcoin is like gold. It's digital gold. They're literally aligning themselves with a physical product to say like it has value. Why would they do that?
And they're doing that just to represent something that's digital, right? Again,
Mhm.
You know, there, and again, we have to realize that, you know, who is they? You know, nobody's scamming anybody with Bitcoin, right? Because Bitcoin doesn't have a CEO, it doesn't have a headquarters.
Right.
It's run by the people, right? You know, it's run by the people. So again, it's digital, and gold is physical. And here's the point to that is that, you know, and I love gold, and I recommend that everybody have some gold, have some silver. You know, I love that stuff. But, you know, I also really like Bitcoin because it's digital. And, you know, we can get in, I can get into the gold standard history, but ultimately, you know, where gold failed was because we started making more paper than there was gold. We started rehypothecating, you know, we started generating more paper certificates than there was gold. And eventually that led to, you know, us depegging the dollar from the gold standard, right? Now, where Bitcoin does a better job than gold, and I think, you know, they both go hand in hand, and people should have some of both. But, you know, where Bitcoin succeeds here is its salability across space and time, right? Again, we go back to, we can't move, you know, you can't move a kilogram of gold very easily across the country. It's very expensive, right? But
Well, so what if I sold my gold, took paper dollars, moved across the country and bought the gold somewhere else?
then you have to move across the country, right?
Or I send it across the country, the paper
Yeah, but
dollars. I send the paper
if
and
you're
then they go
sending the
buy the
paper
gold.
dollars, Andy, you got to use the Fed wire system, you know, Swift, whatever it is. You got to send a
Okay.
bank transfer, and, you know, hey, it's 3 days, and it's not going to be open on Saturdays and Sundays, the bank holidays, or after 5. And, you know, look, Bitcoin is 24/7, 365. So that's why it's very, very interesting.
So then
And
I'm going to send even more money, like as much money. Let's say we're going to send 100 grand. I'm just going to make up a
100
amount.
grand, yeah.
So you think it's safer to go onto unregulated exchanges and put this money and exchange this money using Bitcoin, where we have to have 2 unregulated exchanges at the ends,
Okay. Again, that's
like
not really,
Coinbase and FTX or something like that?
yeah. So there are exchanges that are a bit more regulated than others, right? You know, Coinbase is a pretty well regulated company, right? Now there's some other exchanges. I prefer to use, you know, exchanges that are Bitcoin only, and especially exchanges that advise you to self-custody your Bitcoin. I mean, the types of exchanges that want to get your coins off the exchanges and have you hold it. So the point is, you know, sure, if you want to exchange fiat money into Bitcoin in large quantities, say 100 grand, you know, unless you know somebody that is willing to sell you some, you know, you go through one of these exchanges, right? And you convert.
But do you think the exchanges are more regulated or safer than doing it through a bank? From a security standpoint?
Yeah, absolutely. I think it's just fine. Like, for example, let me explain the scenario, right? When you're trying to send that 100 grand across the country. So what you do is you go on to, you know, one of these, you know, well-run, you know, pretty regulated exchanges, and you convert your 100 grand to Bitcoin, right? And then you take that Bitcoin off the exchange, you move that thing off, right? You move it into a wallet you control, right? And then from that wallet, you send it peer to peer to your buddy on the East Coast, from West Coast to East Coast, right across the country. So that's kind of how that works fundamentally. So
okay,
using an exchange to you know, using it as an exchange as a wallet is not really using Bitcoin's network peer to peer. Because
how do you know the exchange is a valid exchange? Like, how do you know what's good and what's bad?
Well, there's a number of exchanges here that are onshore on the United States that, have had a lot more regulatory oversight, over the last 5 years. There's a number of major exchanges that are have good reputation, right? And again, the lesson in the Bitcoin space is, not your keys, not your coins. So if you're leaving Bitcoin on an exchange, even if it's a very well-run exchange that's never been hacked, and that is a horrible idea, right? You never leave coins on an exchange unless you're, willing to have that hacked potentially. So that's the thing there.
So here's my question then. All right. So let's say there's like 4 reputable companies or exchanges in the United States. All right. So they're reputable. They have good oversight and regulation, just hypothetically speaking. And 1 second. So we've got these exchanges, and the exchanges can be hacked. That's what I heard. Like, you could potentially have a hacking issue on an exchange. That's why you want to transfer it to a wallet. If these are well regulated, couldn't the government just shut down these exchanges? I mean, couldn't they control them? Couldn't they limit the transactions that they do because they're going to be regulated? So what, like, let's say I've got my crypto in a wallet storage. I got it, right here, but they shut down all the exchanges. What do I do with it?
Well,
I can't buy anything with it.
Well, you can always you can buy stuff with it because it has the properties of money, right? And
but that's only in your opinion. I couldn't use it. You want to buy a car from me and I don't accept Bitcoin. How do you get it to me?
Well, then you can convert it to fiat currency and then buy the car. But there's a number of ways to do that, right? So there's a number of ways you can convert it, right? And let's say,
hold on, if they shut down the exchanges, you can't exchange it to fiat currency.
Well, there's something called a DEX, which is a decentralized exchange, right? There's one called BISC, right? So you can exchange fiat money, for Bitcoin peer to peer, essentially, right? And you can do that in a number of ways. Now it's harder to do that in really, really large sums of money, but you can do it. Not to mention, there's something called local Bitcoins where it's a meetup, every month or every week or whatever. And you can, and it's in cities all over the United States. And you can go and meet up with people and you can exchange Bitcoin for fiat money or vice versa. So, to your point, and sure, maybe they do clamp down on all the exchanges and they shut it all down, but I don't think so, because of all the lobbying efforts recently and all the big money that's sloshing around Washington. And not to mention, there's something that there's a law that states, that code is kind of free speech, so to ban Bitcoin is virtually impossible. I mean, you can regulate it, but you just can't ban it, right?
So if I were to go backwards, if I were to try to find out, a transaction, so we see on the ledger that a transaction occurred, and it occurred on an exchange, right? So I go to the exchange and say, this is the number. I want to see this number's ID. I'm a regulator. We think that there's suspicious activity. They give me your information from the exchange because you had to sign on to that exchange and you have to pay taxes and all these other things through the exchange. What makes this so secure? I don't understand. It's not anonymous. It can be hacked through the exchanges. And I could hack your computer while you're making an exchange and see all of your keys and codes. Well, if I really wanted to.
It doesn't quite work like that, right? So there's a number of ways to securely transfer Bitcoin and transact with it, right? And it gets technical, but not too technical. But anyways, yeah, I mean,
so how do you exchange it securely?
Yeah, so there's a number of ways to do it. Like I mentioned, there's local Bitcoins, there's decentralized exchanges, there's regulated exchanges, but Yeah, there's a number of ways you can do it.
Okay, so all right. And then, so those are my concerns though. My concerns is that there's a lot of weak points that are unregulated in the system. And if I was trying to gain information, I could probably do it pretty quick and pretty easily if you've got a pretty good strategy of getting it. It'd be just the same way as like trying to transact something through like, let's say we wanted to do something bad at an airport. There's ways that you could do it if you were smart. You wouldn't walk through TSA in the front of the building. You would become well, one, you'd get people to be hired on to, airlines, and then you transact through people on the inside out. You could do the same thing. You could have corrupt people on the exchanges of Bitcoin or whatever, and transact inside out to get all this information to know who has what and where. You know exactly where they live. They have your identity. They have your social security. They have everything. So you're only as secure as the exchanges. Is that correct? And these things are not very.
The same goes for, bank accounts or whatever. I mean, all that information is all out there, right? And a lot of them have been hacked, right? A lot of these honeypots full of KYC information have been cracked. They've been hacked, and it's all over the dark web. So
my question is, if they make Bitcoin illegal, they can get all your information from the exchange then.
I think making Bitcoin illegal is highly, highly unlikely at this point. Now, further regulation is probably coming. More taxation, I'm sure, is coming, right? But that's why there's KYC Bitcoin and there's un-KYC Bitcoin. So there's two ways to do it, and a non-KYC Bitcoin holds a premium, right? If you have Bitcoin that has never been associated with names or whatever, even though there's a lot of different ways you can obfuscate the identity, and you can you could do a lot of stuff to move around and make stuff really, really hard to track you. I mean, there's ways you can make it really difficult. It's not impossible, but there's ways. But if you have un-KYC Bitcoin, it's impossible to track who you are, there's no way. So that's why un-KYC Bitcoin has a premium. Now, there's a number of ways you can do it. You can go to Bitcoin ATM. You can use a decentralized exchange. You can buy it from your buddies. You can go to local Bitcoin meetup, in your city. There's a number of ways you can do it, and people do it all the time. But it really depends on like what you're trying to do with it and what your goals are. But for me, I value privacy and security very much. And having non-KYC Bitcoin is actually even better than having Bitcoin from an exchange.
Okay, so how do you get non-KYC Bitcoin? Because doesn't everything have to enter the system through an exchange?
No, Andy. Yeah. So that's a common misconception, right? Is Bitcoin is like a closed system, right? So no, if you want to
get dollars, how do you buy Bitcoin then? How do you convert dollars to Bitcoin?
Someone who has Bitcoin exchanges it for dollars or vice versa. So that's how you get Bitcoin, right? Or you can mine it.
Okay, so how do I buy your Bitcoin?
Well, I will sell it to you, right?
Well, how does that exchange happen?
Well, I can send you the Bitcoin, and then you can send me dollars, right?
Outside of the system though, right? I couldn't do it in the system.
No, that's the Bitcoin network. Like if I send you one Bitcoin to your wallet and you send me some cash, there you go. So
I send you cash through the normal system?
Yeah, that works too.
Okay. So then you're bypassing the Bitcoin system. It's not like.
No, you're bypassing the exchange. You're bypassing the exchange, the centralized exchanges.
Yeah. So I guess what I'm saying is if this was so successful and everyone adopted Bitcoin, the exchanges wouldn't be necessary, would it?
Yes and no. I mean, there's still going to be a need for them, especially if you want to dump, a very large amount of Bitcoins. You want to, and you want to pay taxes, and you want to do it all properly, and you got to do all the paperwork. So yeah, I mean, that's, your exchanges are for that, but
Well,
you don't need exchanges to acquire Bitcoin. It's a common misconception.
So here's a question then. Maybe I'm confused. So I can understand that when you transact Bitcoin to dollars, that you'd have a taxable transaction. Now, what if I take Bitcoin and directly buy something with it? Is that a taxable transaction? Do you know?
Yes, technically it is. And that's because, Bitcoin has been labeled a commodity by the Securities and Exchange Commission. So, so technically, yes, it is a taxable event. Now, there's a number of companies, and when you said, oh, well, you can't buy anything with Bitcoin. Well, yes, you can. You can buy almost anything with Bitcoin using a certain service, right? There's a number of services. You can have a card that, a Visa card that you can swipe, pay in dollars, and it's debiting your Bitcoin account. So there's a number of ways you can do that. But yeah, yes, when you sell Bitcoin, it is a taxable event technically.
So if I go and I buy something with Bitcoin, if we were to get to that world, every single thing I buy would be a taxable event?
The way it is structured now, because when you're buying it, and if that vendor is, they're converting it to USD right away, right? When you sell it, you're creating a taxable event. But for example, in a Bitcoinized world, you'd be just transacting in Satoshis, Bitcoin to Bitcoin. And that's not taxable. That is a non-taxable event.
So if I buy something from someone else and I used Bitcoin, it's a non-taxable event, as long as they keep it in Bitcoin.
Correct.
And if they convert it to dollars, I have to pay the tax?
So if they convert it to dollars,
they have to pay the tax, right?
So yeah, technically, if you're selling it and it's getting converted to dollars, you got to pay the tax.
I do? But you just said if I transact Bitcoin to Bitcoin, there's no taxable event.
That's correct. If you transact Bitcoin to Bitcoin, it is not a taxable event.
So
now,
if I
transact Bitcoin to Ethereum, that's a taxable event now, as of 2017 or whatever.
Okay, it's confusing then.
Yeah. So this is where it comes into. This is where, like, inside the Bitcoin system, right? When you transact Bitcoin wallet to Bitcoin wallet, I mean, who cares? That's not a taxable event. There's no way you could even tax that at all. It's not enforceable. But as soon as you convert Bitcoin to dollars, technically it's a taxable event. Bitcoin is a commodity under the eyes of the SEC.
So if I barter stuff outside of the system, I think they're still taxable events, technically.
So if I sell a product or service for Bitcoin, that is a taxable event, of course, and I'm supposed to be, reporting that, right? So, so that is a taxable event if you sell a product or service for Bitcoin.
Okay. I was just curious.
Yeah. So and it gets, all those rules get a little tricky, and we could spend hours diving into it, but, basically it's important to understand that, in the network, it's a self-contained system, but once you jump in between fiat and Bitcoin, then you deal with this whole headache. So it's important to understand, but I'm glad we're going over these points because it's important for people to understand.
Yeah. Is there anything else that you'd like to make comments on? I don't know. I have too much else.
Yeah. I mean, I was gonna maybe discuss some of the energy stuff if you had time.
Yeah. What do you want to talk about?
Yeah. Well, I wanted to talk about energy because there's been a lot of misinformation, and I think because Bitcoin doesn't have a CEO, it doesn't have a headquarters, right? There's two ways you can attack it, right? You can attack it with misinformation, which has been a huge deal, and then you can attack it with regulation. Okay, so let me go over some of this stuff. So initially, the hash rate on the network was so low, you could effectively mine it on a laptop computer with a CPU, right? GPU mining came after that, right? And today you need an ASIC to mine Bitcoin, which is an application-specific integrated circuit. Okay, it's a specialized computer that runs the SHA-256 hashing algorithm in the Bitcoin source code. Now, it's no secret Bitcoin mining, requires energy to secure the network. Okay, this is called proof of work mining. And to those that say, Bitcoin isn't backed by anything, I say Bitcoin is backed by the network, and it's fundamentally tied to the laws of energy and thermodynamics. So proof of work is what tethers Bitcoin to the real world, right? And the innovation is being able to change kilowatt hours into a scarce digital asset. Okay, every 10 minutes, there's a global bounty to solve a really difficult cryptographically difficult puzzle, okay? So currently, the block reward is 6.25 Bitcoins. And, the reason Bitcoin uses energy is because the market values it, right? And this is important to understand. The moment Bitcoin has zero value is the moment zero energy is spent on it. Okay, so each block is cemented in stone forever, and the laws of physics preclude you from unwinding it. Okay, so a lot of people talk about the 51% attack, but here's the thing. A 51% attack is almost out of the question at this point with Bitcoin. And there's really only two things you can do if you control 51% of the hash rate. You can double spend your own transactions, or you can censor other transactions. But it's interesting because this effectively, it gives people zero incentive to attack the network, which is beautiful, right? So let's break down some of these numbers in terms of energy usage. Okay, the world generates approximately, let's say, 154,620 terawatt hours of electricity. And I think that number is growing like 1 or 2% a year or something. It's quite amazing. And I know we're not going to talk about nuclear energy or anything, but I'm a huge fan of that in the future. I think it makes a lot of sense. But it's estimated, so of that 154,620 terawatt hours, 50,000 terawatt hours of energy is lost due to inefficiencies. Okay, whether that's power factor or transmission loss or just ghost loads. When I'm talking about that, it's like ghost loads is like the TV that's plugged in over here that's sucking up watts, and all the other little devices that are on nobody's using, and it's just consuming watts. So there's a lot of this wasted energy out there, a lot. Okay, and Bitcoin mining consumes about 188 terawatt hours of the world's electricity. So that means Bitcoin mining consumes roughly 0.12% of the world's energy. Right? And this fluctuates, but it's a fraction of a percent, right? And interestingly enough, global Bitcoin mining consumes 0.38% of the world's energy that would otherwise be wasted. Interesting. Okay, so it's important to point out too that the 188 terawatt hour number is the theoretical upper bound number. It is estimated to be even lower, around the 100 terawatt hour range. And this is according to the University of Cambridge Bitcoin Electricity Consumption Index, which is updated every 24 hours, okay? So I will explain it in other words. If we found a way to reduce our electricity waste due to inefficiencies by 0.38%, we would cover the entire network's needs, power needs, okay? So I'm going to highlight one other important factor that we need to consider too.
Can I make a comment on that
Sure,
though?
sure.
You said that Bitcoin consumes 0.12% of the total electricity generated. Was that true?
That's correct.
Yeah, but we don't use Bitcoin for hardly anything. Like if you were to transact as much as the volumes of transactions that say Visa, MasterCard, or some of these larger companies or exchanges do, I mean, that electrical load would go blowing up to like infinity, wouldn't it?
No, and let me explain. Now, let me explain. I'm going to get into the Visa thing, but this is very fundamental to understand because there's been a ton of misinformation. But you know, all the information is out there, and you can find, you know, exactly. You know, I just stated exactly how the power consumption and everything. So let me break it down. So another important factor is to consider, you know, that Bitcoin mining technology has grown exponentially. You may be familiar with Moore's law. You know what that is?
I know what Moore's law is, but
yeah, so
yeah, there's people who incorrectly apply it though.
Correct. So, and that's why I said, so the chips in the mining rigs are getting more and more powerful, basically. You know, and that's why I said, you know, Bitcoin mining technology has grown almost exponentially, right? It's not exponential, but it's.
So isn't there the difficulty adjustment though, where that doesn't matter?
The difficulty adjustment? I don't know.
The difficulty adjustment adjusts the difficulty of the algorithm's computational needs every 10 minutes from what a lot of people.
It's not every 10 minutes, but it's every 2016 blocks.
Okay, so if we have more powerful chips, the difficulty would increase, wouldn't it? Because you'd be
and that's exactly where the difficulty adjustment comes in to balance things out. It's beautiful, really. So let me explain this. So the chips are getting more and more powerful. So for example, the first generation ASIC miner in 2013 used 9,351 joules per terahash. Okay. Now the latest ASIC S19 uses 29.5 joules per terahash, right? And a joule is like the amount of electricity required to run a 1 watt device for 1 second. Basically a way to quantify energy in the international system of units. Okay. So interestingly enough, you know, there's been research by the Bitcoin Mining Council, and they surveyed 32% of the current global Bitcoin mining network. And they found participants were using electricity with, you know, 66% sustainable power mix. And of the entire global Bitcoin mining operations, it is estimated that over 55% of the energy comes from sustainable electricity generation. Okay, this is arguably, you know, it makes Bitcoin mining one of the more sustainable industries in terms of power usage. Now, let me explain why that is. That's because Bitcoin thrives on the margins, right? It thrives where energy is lost or curtailed. And this is very interesting. You know, a very common misconception in mainstream media is to extrapolate Bitcoin's energy consumption to the equivalent CO2 emissions. What matters is the type of energy source being used to generate the electricity, okay? So, in fact, Bitcoin mining is actually incentivizing the construction of more renewable power, okay? As we know, you know, renewable power, such as wind and solar, you know, are intermittent and are sometimes unreliable. Let's be honest; they're unreliable sources of power. But you know, power purchase agreements by Bitcoin miners can help stabilize local power prices in regulated markets. Okay, it does this with demand response, and Bitcoin miners can underclock or overclock the chips. So that means we can adjust the frequency on the chips and throttle how quickly the signal is going back and forth between the transistors. Pretty cool, if you ask me. All right. So I've seen ridiculous claims on Bitcoin's energy usage. I mean, just absolute false information. And, you know, famously Newsweek had an article that came out in 2017 saying Bitcoin mining was on track to consume all of the world's energy by 2020. Complete misinformation. Okay, look where we are now. Yeah. Another I saw was on the front page of the New York Times, and it was basically explaining how Bitcoin was rapidly exacerbating climate change. A complete falsehood, right? And lastly was the famous comparison of a single Bitcoin transaction to the swipe of a Visa card, right? Bloomberg came out with this article, and they stated one Bitcoin transaction would generate the CO2 equivalent to 706,765 swipes of a Visa card. All right. The energy exchange rate methodology used by the author is completely mistaken. All right. Bitcoin transactions are fundamentally different to Visa transactions. Right. Bitcoin is a full stack, self-contained, final settlement monetary system. Visa transactions are non-final credit transactions that rely on external underlying settlement rails, such as ACH, Fedwire, SWIFT, and the Federal Reserve. And not to mention, they take a 2% cut. So let me say that, and I'm not going to digress too much, but I'd say the mainstream media has, their own narratives in mind, and I'm not going to get into it too much, but that's for sure. But
so Bitcoin, you say uses renewable power or whatever, but renewable power,
it uses a lot more renewable power than people give credit for, and that's because it's a lot of these mines are located, say, in Iceland. There's geothermal, in China is right next to these big hydro dams, and these guys, there was so much energy, that they couldn't even put it back on the grid. So that's where, Bitcoin mining kind of soaks it up like a sponge, in the similar sense for solar and wind too. And this is happening today, right now.
Yeah, but solar and wind they're not renewables, they're replaceables. You have to replace those every, like 20 years or 5, some are like 10 years, like the blades, because they get sandblasted, and then you've got.
I agree. I think there's a lot to discuss about renewables and really how much money we're spending pouring into this garbage that just doesn't make sense, when we all know, we need to be using nuclear power. And there's just no question, right? The energy return on investment is just staggering. And it amazes me. I wrote this down the other day. I think we spent $3.8 trillion, globally, to reduce CO2 emissions by like 83% to 82%. It's just ridiculous. And this whole ESG narrative, it's just, it's completely ridiculous. But there is some need for, I will say, solar and wind make sense in some cases, but this whole mass grid, solar and wind, all this garbage that's coming out, it's just, it just doesn't make sense. Come on.
Yeah.
Yeah, I think we're on the same page with that, Andy. But
okay.
But listen, I would bet the average person who's read the misinformation on Bitcoin doesn't even know what the petrodollar means, right? Right. Our global reserve currency system is implicitly backed by the extraction of oil, right? During the last energy crisis in the 1970s, America brokered a deal with Saudi Arabia to supply them with weapons and military protection. And in return, they would only sell oil in dollars, thereby creating a global demand for international dollars for dollars. So it's important to understand that the grossly oversized US military, whose presence worldwide is necessary to backstop the international dollar system, is the single largest consumer of oil. So whenever these environmentalist ESG type idiots start to claim that Bitcoin is ruining the world, you think again, really do some research, okay? And another point I would like to mention is that the finance and insurance industry uses 5,000 terawatt hours of electricity, which is 27 times the energy usage of Bitcoin. Okay.
Yeah, but
So,
Bitcoin's like 1/1 millionth the size of it. So if you were to scale Bitcoin up to the same size, it would use far more energy than the current system. That's why you got the transactions of Visa swipes in relationship to the amount of energy spent to get a Bitcoin.
yeah, but you got to understand that the way I see it is that the energy expended to secure the Bitcoin network is worth every single watt, because we have a fully open and permissionless peer-to-peer system that runs flawlessly 24/7. You know, it's amazing, and it gives.
But you can't use the largest system in the world with like billions of transactions a day and compare it to Bitcoin that produces like no transactions in comparison. Because if you scale Bitcoin to the same size as this, you would consume all of the energy that we have in the world.
That's not true. Yeah, that's not true, because
so tell me why it's not true.
It's not true because there's second layers upon Bitcoin, such as the Lightning Network for smaller transactions, right? And not to mention, like I said, the technology in Bitcoin mining, right? The chips are getting better and better and better. And
wouldn't that be difficulty adjusted out though?
Right.
As chips get better, they're gonna change the difficulty way up. So you consume. Basically, what they're doing with that difficulty adjustment is they're saying we need a fixed amount of energy to produce so many blocks. That's the way that I view it.
I wouldn't see it as a fixed amount of energy, but no, I mean, that's it. Again, it goes back to the claim that, mainstream media, Newsweek came out and said in 2017, Bitcoin mining was on track to consume all of the world's energy. It's just, there's no way. There's just no way.
But there's been no adoption of it. We're not using it to transact.
How could you say that there's been no adoption of Bitcoin?
Well, in comparison to the mainstream transactions, I haven't done a single transaction in Bitcoin.
Sure.
So myself.
Sure.
And neither has a lot of the people that I know, but we all use the system. So when you can't take a gigantic system that's doing like 10,000 transactions per second in everywhere in the world, and you've got all these transactions in a day. You scale that to the Lightning Network, which I'm guaranteed the Lightning Network power consumption isn't in that Bitcoin consumption calculation of 0.12%. So if we were to scale all that over, I mean, you'd be consuming so much energy, it'd be ridiculous. Well, because you have no scale right now. That's like saying I compare the entire world's usage of oil of 100 million barrels and then compare it to my single usage of my car that uses like 30 miles per gallon. And you're like, well, my car only uses this amount. But it's like you only use with one person, or you only use a small network of people. You're not using it for the entire world. I think that's a comparison that you can't do, in my opinion.
Yeah, I mean,
because there's no network, there's no transactions going through Bitcoin in terms of volume of transactions.
I don't understand why you say there's no transactions going through Bitcoin in terms of
so
volume.
let's say Visa transacts 10,000 per second. All right. And we're doing that every single second for the entire day. Right now, what is the volume of transactions going through Bitcoin?
Yeah, I mean, it's considerably lower than Visa or all the other payment networks. But
okay, so what you're doing is you're comparing against all of these volumes of transactions to something that's not transacting anything. Of course, it's not going to use any energy. So
I don't
so let's say you say
it's not transacting anything. I don't know if you're right there.
Well, what I mean by anything, it's a negligible amount. It's 0.01% of what the big boys are doing. So what you're doing is you're saying, if I were to take a transaction of Visa and compare it to the transaction of Bitcoin, Visa transacts per transaction less energy. It is more efficient at transferring value than Bitcoin is. Period. So on an energy perspective, just energy.
If we look at it today, sure, that is the case. A Bitcoin transaction compared to a Visa transaction, but it's again, there are two different systems, and it's very hard to compare. And again, I alluded to, the comparison on CO2 emissions, right? And that's complete bogus. But you got to understand too that, Bitcoin on its main chain, right, is not really meant to be like a payment, everyday payment network, right? It just doesn't make sense because there's the transaction fees, and that's why the second layer is such a big deal. And this has been a huge innovation over the last few years, and it's just starting to gain adoption as more and more people have access to mobile phones, the internet. The Lightning Network, it basically allows for these smaller transactions off chain, requiring significantly less energy for all these minor transactions. So in a way, it's definitely possible that on the Lightning Network, they could do much more transactions than Visa, and with no 2%, 3% cut. Okay, so the ability for that to scale in the future, is it could be promising. So that's why I'm hopeful in the technology and the adoption, really. And I think of this similarly to the internet, right? In the early days, right? At first, the internet was used by professors to exchange, educational documents or whatever. Now look what we have, man. I mean, in the same protocol, TCP over IP, it's the same protocol that's being used today on the internet. So I do see that we are, 13, 14 years into it. We're still early into it. And the innovation, is constantly going with this project. So
the Lightning Network is what we need to use to transact back and forth
absolutely.
outside of the
That would
Bitcoin
be
network.
And that's what's beautiful about this is that, the Lightning Network allows people to transact, and they can do it in a permissionless manner. And this is what's so important to understand, that you can do this without KYC. You can do this, and people are working on the technical aspects of it. Yes, I understand some of the stuff a little better than others, but I run my own full Bitcoin node here. But for your average person in sub-Saharan Africa that just got a cell phone, right? They don't know this stuff, but people, very smart people who are very passionate about the implications of the technology are working on this, and they're working on adoption and getting this to the masses, because I can tell you, Andy, a lot of people could use something like this. And as I'm sure, there's a huge demand for dollars worldwide. And that's why a lot of people are even, resorting to using Tether and all this stuff. And, the Lightning Network could be very promising. Now, again, we're in the early days, and there's some bugs to work out, but this is technology, and I firmly believe that, as a species, humanity, technology is what has evolved humanity, right? Technology is our best friend, and we need to embrace it sometimes, and not run away from it, unless you want to be like the Luddites and the Amish that are, and that's cool too if you're into that. But hey, I think we could solve a lot of the world's issues with technology, and we are.
Well, if we all lived like Amish, we would have sustainability because we wouldn't overpopulate the world to some extent. Technology's allowed us to harness energy in ever greater quantities. Now, if that were to ever reverse, where technology could not harness more energy, where it couldn't allow us to use more energy, then we would have a problem, because the world would populate to a size that would not be sustainable without that technological help. And that's every society that's failed in history, if you look at them, generally what happens is their energy source, something happens to their energy source. Exactly. And they've always been highly technologically advanced societies that have failed. The ones that haven't, What's that?
It's a resource problem. Exactly.
Yeah. So the Amish or people that didn't really expand up, or they kept pretty simple, they've got more sustainable lives because they wouldn't blow through. They could only populate to the extent that their energy supply and resources could sustain.
Sure.
And I think we may be, I mean, it's possible, one could argue, I'm not arguing this, but one could argue that technology has harnessed enough energy quickly enough where if we ever were to reverse our energy source back down, we would be in a very big, grave problem.
And that's, and I
population. I know it's off topic a little bit.
No, and I actually follow a lot of these topics quite deeply. Yep. You know, I study this stuff, and it's very, very interesting to me. And you know, and again, that goes back to this whole energy crisis thing that we're in. And I think, you know, we are solving this problem. We're trying to solve this problem. And, you know, I think there's a lot of crazy stuff that's happening, you know, by central planners and government regulation and all this stuff that just, it actually hurts, you know, a lot more than it helps. And in terms of global energy markets, I mean, we're going to be in for a wild ride here coming up, right? And believe me, man, I'm very long, you know, nuclear and you know, definitely natural gas and oil, man. We're going to see some crazy stuff happen, man. I'm watching this stuff and I'm thinking, boy, it's going to get crazy. But, you know, I think it is important to understand, you know, maybe how Bitcoin can actually help solve some of these issues in a way. And to take a deeper look into it is important, and to look beneath all the garbage misinformation that's spewed out on the, you know, on these mainstream sources, man. It's just crazy. And that's why I felt a moral obligation to come out here and explain this stuff in more detail, because, you know, people need to know. And I advise people to just dig in, do more research and learn and be curious, man.
Okay, great. Yeah, I don't have anything else. Charlie, what else? Do you have anything else that you'd like to say? Any closing comments or anything like that?
Well, you know, I'll say this, that, you know, for the first time with Bitcoin, we have absolute scarcity. And I think this has deep philosophical impacts, you know, and we're just beginning to understand this. So, you know, I'll be keeping a close eye on it, you know, and it'd be very, I'm excited to see, you know, how this evolves. And you know, I just want to say thank you very much, Andy, for having me on your show. And your videos provide a lot of value for me, and I know they do for others. So thank you very much for all your time. I really appreciate it.
Yeah, thank you. And thank you for coming on. I really appreciate you coming on and sharing your opinions. And I needed someone who was very pro Bitcoin, because I don't want to, you know, be one-sided and share just if someone's anti-Bitcoin or why they sold, you know.
And that
so
shows
I like to
a
have
lot.
both sides.
That shows a lot. Thank you very much, Andy.
All right, guys. If you guys like, you know, what we're talking about, definitely put something in the comment section. Say go Charlie.
and you can find me. I'm trying to get some more Twitter followers here. I'll be more active on there. You can follow me at IAM Chaz, CHAZCOLE at Twitter. So you can find me there. And if you want to learn more stuff about Bitcoin, I'd recommend this book, which is Mastering Bitcoin by Andreas Antonopoulos. So thank you very much, Andy.
All right, guys. Thank you.
Take care.